All right, so with Carvana's latest results, you can probably guess that things are looking pretty good given the way the stock has pretty much tripled in the past 18 months' time. But I'm curious, Asa, what has jumped out to you in terms of financial performance or anything else?
Several things. One is this record of 19 consecutive quarters of triple-digit unit retail growth and revenue growth. That's a really strong statistic, but it also speaks to the fact that this company is still very small. They just celebrated their milestone of 100,000 cars sold. And upon that, actually, CEO Ernie Garcia has given a stock grant to employees. I think it's worth about $36 million to celebrate that milestone and keep the troops revved up. The astonishing growth actually presents one thing we see often in companies like this, which are using data and technology to grow very quickly, in that the bottom line is right now in a loss position. But before we get to that bottom line, let's look at this most recent quarter, which is the third quarter of 2018. Sales increased 137% over the prior year quarter to about $486 million. And gross profit increased 181% to $57 million. We're going to talk about gross margin and the way Carvana cobbles together its gross margin, because I think it's very important for investors to grasp this going forward. But before we do that, let's just work down to the bottom line. Selling and general administrative expenses increased 97%, and the net loss before income taxes increased 62%. Now, I just threw a lot of numbers at you, listeners, but the big takeaway here is that revenue is growing at a faster rate than expenses. So the company is creating operating leverage, even though that net loss grew 62% year over year from close to 40 million to 64 million. Revenue grew at a higher rate, and that allowed gross margin to also grow at a higher rate than expenses, which have sort of kept pace. These are largely selling expenses, general and administrative expenses, and now the company's spending more on technology. Let's talk about gross profit, which is one of the really interesting value drivers for Carvana. Their total gross profit per unit, or GPU, is $2,263. The company has a long-term goal of $3,000 GPU, and that's a pretty decent gross profit for a used car company. And it should enable that bottom line to come closer to parity over time. The way that Carvana builds this gross margin is extremely interesting to me. The close line share of this comes from retail sales. So if you take this number of about 2,200, roughly half of that comes from the retail used cars it sells. But another 47% comes from finance receivables. So what happens, as Vince told you, when you buy a car from Carvana, you're offered financing, often at attractive rates versus your bank. If you take that loan, the company then has this long-term financing receivable on its books. It's going to collect money from you month after month. So Carvana bundles up these car loans, and it sells them at a premium without recourse, which means that if myself or Vince, if we stop paying on our car loans, that doesn't go back to Carvana. They don't have to make that loss. That belongs with the person who bought that bundle of loans. And this is a really lucrative business for the company. As I said, it supplies about half of the gross margin. And as Carvana has expanded into over 200 metropolitan areas, that's its extended reach across the country, it ups the number of cars it's selling each month, and that drives this total bulk of financing receivables that it sells. So as a shareholder or a prospective investor, keep your eye on this GPU number as it tracks towards 3,000.
Yeah, that's an awesome, I'm really glad that you mentioned that breakdown for the GPU number and some of the mechanics behind that. It's interesting to see that for the full year, Carvana expects their unit sales to come in at around 95,000 and with $2 billion of revenue. And Asa, you can chime in if I'm forgetting something, but I know GPU was a big metric that management definitely spoke to quite often. But some other things that listeners should be tracking, I think, as they evaluate this business, big ones that jumped out to me. that unit sales volume, seeing that number continue to track higher. Also, something like average days to sale, and management has mentioned how that factors in again to that GPU number. And more broadly, you mentioned the kind of runway for the number of markets that Carvana can enter. I'm also going to be following the number of markets Carvana is in, also the advertising spend. But to give you some perspective on how this GPU number has tracked over time, that medium to long-term goal of $3,000, with this has been scaling up so quickly. It is just surprising to see. You go back to 2014 when Carvana operated in just 3 markets. They said they had negative gross profit per unit of $200. 2 years later, it's in 21 markets with gross profit per unit of just over $1,000. And then another 2 years later, now they're really starting to work closer and closer to that $3,000 goal.